So, Mark, no surprise, the federal funds rate was not lowered by the Federal Reserve. And as you showed us in our meeting that you had at our real estate brokerage not that long ago, the percent chance that the Fed was going to lower the federal funds rate was 1%, and it was 99% chance that they would hold and 0% chance that they would increase. So the 99% proved to be the case. That's what won out, and we are holding again until it looks like June or September. So what were your thoughts from the Fed meeting and, then Powell's sort of speech thereafter?
Man, you gave away the ending.
Right?
Like, why do we even need a video now? Like, I was just thinking, no, in all seriousness, the expectation was that we're not going to see a drop. Our expectation is still that we're not going to see a drop in the federal funds rate probably until June. And the probabilities are looking like it is going to be June and then again in September. Not even an either or at this point, but that we'll see. I mean, there's so much going on that predicting that's going to be really difficult.
Yeah. And it certainly seems like it's something that, is cool. Like everybody was very excited thinking that 2025 was going to be the year of the interest rate cuts for the Federal Reserve. Mm-hmm. And we were projecting 4 or 5 not that long ago. And now we're talking about 2 or 3 if we're lucky. Yeah. And then Powell afterwards, there's always the Fed meeting. The mm-hmm. decision is rendered. And then Powell gets up and does a press conference thereafter. He said a couple of hot button things, and I want to get your thoughts on it. So one of the things that he mentioned was that the tariffs are transitory. And we all know, if we remember 2021, transitory became a, so to speak, 4-letter word.
Yeah, and it's funny because the way this lays out, if you're not familiar with it, is you get the Fed decision. They announced that 1 o'clock our time. And then 30 minutes later, he gets up and gives his press conference. But when we release the numbers, they also release, kind of a narrative of okay, we're going to keep the rates the same. Here's why, and the narrative it's changed a little bit. This time around, it does acknowledge things like, maybe there's more uncertainty in the market. Things are still moving towards our goals, but. And then the press conference starts, and he basically reiterates yes, what he put in the narrative is that hey, there's uncertainty. There's definitely going to be uncertainty, and what he says, those comments, can make a difference.
Yeah,
and they can make the bond market go up and down, rates go up and down. The stock market go crazy. I mean, just different things can happen. But right now, things are kind of in a state of uncertainty because of these tariffs. And then he used the word transitory.
Yep.
And if we all remember now, if we were anywhere near the industry, that was a hot button because the perception, no matter where you are politically, the numbers kind of don't lie. Right. That there was an increase in inflation and it started to go up and there really wasn't much of a reaction because they said it was transitory inflation.
Yeah.
And it turned out that it was not in any way transitory, and it took them quite a while to respond. And then once they did, they had to keep responding for a period of time. And inflation hit 9.1%. Is what the numbers looked like. And I mean, that was scary.
Yeah.
That was kind of crazy.
Yeah, well, there was nothing transitory about it. I mean, we're just now in 2025, almost through the first quarter, getting back down to what is considered to be an acceptable inflation rate. The two things that stuck out to me that Powell said after the Fed meeting was the transitory thing, most obviously.
Right.
And then that there is the possibility of a looming recession. Now, he said that at any point in time, there's always, give or take, a 25% chance that a recession can occur. And he said that, I forget the exact words he used, but effectively, there's a slightly elevated chance that there's going to be a recession. So if the baseline probability is 25%, we're 35% probability. And that makes some people nervous. The recession word is just like the transitory word, and it makes people very uneasy.
Right.
It makes them take pause in investing. And one of the things, obviously this is a show where we talk about the real estate market, mortgage market, houses and stuff. Some of the numbers that we're seeing from Zillow, from NAR, from Realtor.com, stuff like that, is that the projections of 2025, where it was going to be somewhere, depending on whose article you're reading, it's going to be 4 to 8% increase in the market in 2025 from 2024. Now we're seeing like maybe it's going to be a 1% to a 3% increase. So I think a lot of people are hearing some of these things, and quite honestly, it is making some of them a little nervous.
I think there's a lot of hesitation. You hear the recession word and, oh my gosh, and basically what Powell's saying is like, okay, you know what? I mean, at any given time, that is a possibility.
Right.
It's a little more heightened possibility right now because, we're basically trying to slow down the economy by keeping rates higher, the federal funds rate higher.
Right.
And so they're not dropping, because if they do that, then, the economy takes off again. That may cause more inflation. So they're basically happy with the way things are right now. They're just kind of in a wait and see mode on some of the numbers to make sure that, they don't take too long to react. Right. And then, as a result, we talked about tariffs last time.
Yeah.
It causes a lot of uncertainty when, we're on again, off again with the tariffs, and people are adjusting home sales expectations for 25. When they say adjust them, they took them from like 8% growth was expected, and now it's 5.
Right.
15% growth, and now it's like 10 or 8 and it doesn't, it matters who you ask, because you can go out there and find 10 different numbers, 10 different expectations. And you can spend a lot of time getting wrapped up in that, right?
Yeah, definitely. You can get lost in the weeds for sure.
Yeah.
And a lot of agents, I think, are doing that. I'm sure LOs are as well.
Well, one of the things that's affecting too is, if you look at the average mortgage bank, and if you look at, home sales, they've kind of run, we're all in a tough period.
Yeah.
And it continues. We thought it was going to end in 24. It didn't end in 24. Now, oh my gosh, 25 is the year. Oh boy, now it doesn't look like 25 is the year. So, and you've got independent mortgage banks that, were losing $2,500 a file.
Yeah.
And now, then they went to making like, I don't know, $600, and then they lost $70. They're just barely, a lot of them skating by. There's a lot of mergers and acquisitions as a result. And realtors are sitting out there like, we're still stuck at the 4.1 billion in sales level, in units, and year over year, and it's not going anywhere. And a lot of times people get caught up in the numbers.
Yeah.
And from everywhere, right?
That's exactly right. But as a licensed practicing realtor in the Houston, Texas area, I will take a 5% increase or I'll even take a 1% increase over a 1% decrease. So 2024 was the slowest year for real estate since the 90s. Most people that are practicing real estate today were not practicing real estate in the 90s. So ipso facto, it was the slowest year of their career. There's a few still hanging on. I can think of a few that come to mind, but most of the agents now are not, or who are practicing now, experienced the slowest year of their career. So tying it all back to houses, what can you do as an agent? What can you do as a loan officer?
Well, and you might, we'd be remiss if we didn't mention one thing, and that is that, yes, they were doing real estate in the 90s, and maybe they still are today, but their glamour shot from the 90s still is their profile picture today.
Yeah.
And something's got to be said for that.
It's pretty amazing that they're hanging on to the big hair, glam shot from the 90s, but you would think that they would update their headshot so that at least when meeting a client for the first time, you wouldn't think that the agent's mother showed up in their place, but I digress from that point. That's a little off topic from Jerome Powell. But I always tell my agents on my team, last time I checked, the cell phone still works the same way it always did. Pick it up, call your sphere. Information is your friend. Interest rates are higher now than they were in COVID times. I think a lot of people thought the rates were going to come down quickly. And as you say, which I love your quote, and I use that all the time with my clients, is that rates take what is that? The
Elevator
elevator up
up.
and the stairs down. So,
Right.
it's going to be a while, but the reality is if you're looking to buy a house, are you going to sit for another 5-6 years for the rates to come down? Who knows what appreciation is going to do in that time? We haven't seen the quote unquote looming crash that everybody seems to be talking about. It hasn't come yet, and it doesn't seem like it's going to come, at least not to the level that a lot of people are suggesting.
And can I bring one more point, and that is that a lot of people are waiting. They're getting nervous. They're looking at the numbers like, oh my gosh, this source says this, and this source says that, and this source says this. And as far as mortgage rates go, they over the last 30, 45 days, they've moved maybe 0.25%.
Yeah.
They're kind of within that range. And on a $300,000 loan, that's like $48 a month. And I mean, that's more than my kids spent at Taco Bell.
Yeah.
But that's about what my kids spent at Taco Bell last week.
That's a hefty Taco Bell order.
Exactly.
I remember going through the drive-through in high school for like $7. You'd have like 3 bags full of stuff.
Yeah. And we, we can sit around and get, analyze all that and try to be, I got into this to help people buy houses for their families.
Yeah.
And really that's what I want to do.
Yeah.
And sitting around and looking at all the numbers and oh my gosh, and fretting over the sky falling and all this. Whether you're a buyer or you're a realtor or you're a mortgage guy or you're an inspector or appraiser, let's just go help people buy houses.
And I think that's really well said. And I think the last real question now is, because this is right in your line of business, Powell did not lower the federal funds rate as expected. What's happened to mortgage rates in the last couple of days? And before we finish up this video, guys, Mark and I noticed a statistic that's a little bit alarming. Most of you that watch our show are actually not subscribed to the channel.
We love to see your comments. We love your viewing our videos, and we hope you get something out of it. But you could miss one if you don't hit that subscribe button.
Guys, we're on a mission to 1,000 subscribers. Your support helps us tremendously. Back to the chat.
They reacted well. They pulled back a little. They reacted. I mean, it's not a huge difference.
Basically, we're just kind of flat.
Yeah, we're kind of motoring along, And while I wouldn't want to, quote rates here and get other lenders upset because they're, or whatever.
Because they can't touch your rates.
Because I didn't say that, but in reality, I mean, we're seeing 1/4 point, 1/8 of a point. When rates move, they're not moving like a point, or 2. We're not going from 6 to 7,
right.
when they go up. We're going, 6 to 6.125, or 6 to 6 1/4, and it's not a huge swing. Yeah. The last one we saw was March 6th of 20. And when was that? What happened that day?
March 6th of 2020?
Yeah.
I believe there was a global pandemic that shut the whole planet down. Yeah.
Yeah. That was one of 2 times I've seen rates go, way up or way down in a hurry.
How much did they change just in that one day?
I mean, it was easily 2%.
No
it was
kidding.
crazy.
No kidding.
But it was, it was very similar to when in 2008, things really came crashing down. And, there were days where we would see full point swings in interest rates.
Yeah.
And there were also days when, we went to fund a loan and there was no money, or the company we'd brokered it to shut down. And, that's not what's happening now.
Yeah.
We've learned a lot in history, for sure.
Yeah. Regulation, for better or for worse, it seems like is made some positive differences in the mortgage world. Even if it can cause more hurdles, we're not seeing those foreclosures just, one after the next like we did in 2008.
Exactly.